During times of volatility, it's important to have a plan. I was joined by Christian Magoon of Amplify ETFs. He offers his take on how to protect against downside and how to find upside potential.
We're seeing a lot of issues. One of them could be a global economic slowdown. Another could be a trading war breaking out here. It seems to be peaceful, but we never know. But really what we're trying to do with the BlackSwan ETF is not necessarily protect against specific events, but to have protection against the market activity that ends up happening due to BlackSwan events. And that market activity tends to be drawdowns of 15% or more, which have harmed investors in the past. So we're able to, with the BlackSwan, have a protective mechanism that's always on in the fund in the form of 90% U.S. Treasuries that help to limit some of the downside that happens in BlackSwan events. So the BlackSwan index, which is what the BlackSwan ETF seeks to track, is pretty simple. It's composed of two buckets, 90% U.S. Treasuries with a 10-year duration target, and then 10% SPY call options. So essentially you have your protected kind of sleeve, which is that U.S. Treasuries, highest credit in the world, and then you have your risk-on sleeve, which is that 10% SPY in the money call options. And that gives you kind of a balanced approach to being able to participate in a lot of the market gains, but in a risk-off event, have that Treasury security. So this fund is really, and the index is really based off the principle that in market crisis, the S&P and U.S. Treasuries tend to behave inversely. So during a risk-off event, money leaves the S&P 500 and goes to U.S. Treasuries. So we think historically we should see about a 70% of the S&P 500's upside with significantly less downside in the SWAN strategy. I expect to see a lot more innovation, with markets at all-time highs right now, with a 10-year high in cash on the sidelines. I think there's a lot of fear in the market, so I think there's a lot more product development that's going to focus on kind of protective, outcome-oriented products. At the same time, there's been a lot of inflows into lower volatility type strategies, maybe a bubble in those areas, so I think some of that will unwind over the coming year. The other thing I would say is this year we've seen a real lack of flows into growth ETFs. People are concerned about it, even though many growth ETFs have had great years, up 20% plus. I think some of those growth flows will return in 2020, depending on market conditions, because they've been ignored this year to the chagrin of many investors' portfolios.
And that wraps it up for your ETF show from the New York Stock Exchange. Make sure to watch next week for the latest in the industry. I'm Remy Blair for Asset TV.